Okay, so hello guys, this is the fourth episode. Okay, in this episode, we're gonna discuss the major, minor exotics, commodity currency pairs, and the commodity pairs in the Forex and CFDs market. Okay, so I'm gonna read through this document and then I will explain you graphically how to understand this topic. Okay, so in the Forex and CFD market, currency pairs are classified into different categories based on their characteristics and trading volumes. Similarly, commodities are also traded in various pairs. Here is a classification of major, minor, exotic currency pairs and, and popular commodity pairs. Okay. So major currency pair. Major currency pairs consist of the most widely traded currencies in the world. Okay, they include the US dollar and another major currency. So what is a major currency pair? Major currency pairs are those currency pairs that are widely traded. They account for almost 80% of the forex transactions. Okay, these are the major currency pairs, the major currencies of the world. Okay, so there's a very easy way to understand it. Okay, we have almost 8 big economies in the world. Okay, these eight big economies have their currencies. Or for example, Europe is a very big economy. US dollar is a very big economy. Okay, so Europe is a very big economy. US is a very big economy. Japan is a very big economy. British pound is a very big economy. Switzerland is a very big economy. Australia is a very big economy. New Zealand is also a bigger economy. Okay, Canada is also one of the major economies of the world. So these currencies are associated with the major economies of the world. Okay, and uh, uh, when we are trading these currencies, okay, we are actually trading the major currency pairs. Now, how to understand this? Okay, now you have once you see this currency list, okay, Euro US dollar, USD JPY, GBP US dollar, USD CHF, AUD USD, New Zealand dollar US dollar, US dollar CAD. So you have noticed one thing, that each of these major currency pairs, they are tied with the US dollar. You can see every every of these currency pair are always tied with US dollar. They have US dollar either as a base currency or as a core currency. And the other currency belongs to the major currency of the world. Okay. So here is an example here. Let me show you. Okay. Now we have, these are the major currencies of the world. You can see US dollar, Australian dollar, New Zealand dollar, JPY, CHF, British pound, euro, and CAD. Only these are the most widely traded and the major currencies of the world. Only these 8 currencies. Okay. So major forex pairs combine major currencies of the world with the US dollar. So what does a major forex pairs do, or the major currency pairs do? They combine these currencies, okay, with the US dollar, and they form a major currency pair. For example, we have a US dollar here, and we have the 8 major currencies of the world. So we combine US dollar with US dollar. Combination of US dollar and US dollar is not possible, so we will discard it. Now we combine USD and AUD. So AUD combined with US dollar will become Australian dollar and US dollar. Okay. Similarly, New Zealand dollar when combined with US dollar will become New Zealand dollar and US dollar. Okay. Now JPY, which is Japanese yen, when combined with the US dollar will become USD JPY. Okay. So similarly, CHF JPY, CHF USD. When the USD and CHF will combine, they will become USD CHF. When the British pound and USD will combine, they will become British pound US dollar. When the euro combined with the US dollar, it will become euro US dollar. When the Canadian dollar or CAD combined with the US dollar, it will become USD CAD, or the Australian dollar or the US dollar and Canadian dollar. Okay. So the only exception is that we cannot combine US dollar with US dollar, so we will discard it. And then we will combine the rest of the currencies, and this will become the forex major forex pairs or the major currency pairs. Okay, and remember one thing, that sometimes the USD become quote. Sometimes the USD here. Let's so for example, in AUD USD is a quote currency, but in USD JPY and USD CHF and USD CAD, USD is the base currency. So there is no hard and fast rule here. This is the rule here which you have to follow. You have to learn these major currency pairs in this order. You cannot say like this, that USD AUD. USD AUD will not be a major forex pair, but AUD USD is a major forex pair. New Zealand dollar USD is a major forex pair. USD New Zealand dollar is not a major forex pair. So you have to combine these like combine these major currencies with the US dollar in this order. You cannot change the order. You have to learn this order. Okay. Now we move on to the minor currency pairs. Now minor currency pairs, okay, they are also known as the cross currency pairs. Okay, they are the cross. They are the cross between these major currencies, excluding US dollar. We only exclude US dollar, and the rest of these seven major currency of the world, when we combine them together. For example, Australian dollar when combined with New Zealand dollar will when combined with CHF, like this and this. Okay, like uh, like this and this four, right? So we gonna get a minor currency pair. What we gonna get? We gonna get a minor currency pair or a cross currency pair. Okay, so minor currency pair do not include US dollar. Okay, they consist of two major currencies. Okay, two major currencies. Okay, excluding US dollar. Excluding US dollar. US dollar is not involved here. For example, euro, British pound. Now we combine euro with the British pound. Okay, euro with the British pound. When we combine it together, we're gonna get euro GBP, which is a minor currency pair. So similarly, when we combine Australian dollar with JPY, okay, we have here Australian dollar, which is here, and JPY, which is here. When we combine this together, it will become AUD JPY. Similarly, we have New Zealand dollar CAD, and then we have GBP JPY. Okay, so what we have to do, we have to combine these all major currencies excluding US dollar. In the major currency, what we do, we combine all major currencies of the world with the US dollar. Here in the minor currencies, we combine all major currencies together excluding US dollar. US dollar is not involved here. This is the major difference between major currency pairs and the minor currency pairs. Okay, this is the list uh, of the minor forex pairs or the minor currency pairs. You have to learn this list, okay? AUD CAD, AUD CHF, AUD JPY, AUD New Zealand dollar, CAD CHF. You can see that all of the currencies are the major currencies and they don't include US dollar. Now we go to the exotic currency pairs. Exotic currency pairs involve one major currency and one currency from smaller and emerging economy. What we do, that we take one currency from these major currencies of the world, one currency from this major currency of the world, and we combine it with the currency of the other uh, with the currency of the other nations. Okay, other smaller nations which don't have the major currency. Okay, so we combine them together and we get the exotic trading pair. For example, USD PKR. Okay, so USD PKR is a exotic currency pair because we have one major currency, which is USD. PKR is not the major currency, so it becomes the exotic currency pair. Okay, so you can see the example of, okay, they generally have lower liquidity and higher spreads. So I always advise people to stay away from the exotic currency pairs, okay, because they have a lower liquidity and they have the higher spreads, okay, compared to major and minor pairs. So you should only be trading these minor currency pairs or and these major currency pairs. Okay, you can see these major currency pairs. So you can only trade these major currency pairs or these minor currency pairs. Okay, and you should avoid trading exotic pairs. For example, we have an example here, USD TRY, which is US dollar and Turkish lira. So US dollar is the major economy, TRY, which is Turkish lira, and it belongs to Turkey. This is not the major economy of the world. When we combine non-major economy of the world, when we combine the currency of the major economy of the world and the currency of the non-major economy of the world, we get what we get. We got an exotic currency pair. Okay. So for example, euro and TRY. Euro is a major currency pair. Okay. A TRY does not belongs to the major economy. It is a second class or a third class economy. Okay, so we it is a second world or a third world economy. So we call it as Euro Turkish Lira, Euro Euro Turkish Lira, Euro TRY. This is the exotic currency pair. Similarly, we have USD SEK. Okay, now US dollar is a major economy of the world. Swedish krona is not the major economy of the world. Okay, it belongs to the Sweden, which belongs to the a developed nation, but it comes in the second world order. It comes as a a second world country. Okay, when we combine these both currencies together, we get exotic currency pair. Okay, similarly, we have euro and PLN, which is Polish zloty. Zloty. Okay, so Polish zloty is belongs to Poland, which is also a developed country, but it is not a first world country. Uh, it is not a major economy of the world. Okay, so the currency of the PLN, which is Polish zloty, is not the major economy of the world, but euro is the major one of the major economy, one of the 8 major economies of the world. So when we combine these two currencies together, which is major currency of the world with the non-major currency of the world, when we combine them together, we get uh, what to say, we get a exotic pair. Okay, exotic forex pair. So this is the list of the this is the list of the exotic currency pair. You can see the list. I will zoom out. You can see SGD, USD, Australian dollar, SGD. So this is a complete list here. You have to learn this entire list. Okay, you don't have to learn. You just have to get an idea. You have to get the concept. If you understand the concept about exotic pair, major, minor forex pairs, then you don't need to learn it. You just need to understand the concept. The concept is very simple. In the forex major pair, in the major forex pair, we combine the major currencies of the world with the US dollar. In the in the minor forex pair, or the minor currency pair, what we do, we combine all major uh, currencies of the world together, excluding US dollar. That goes to uh, what to say, minor currency pair. And with reference to the exotic currency pair, we combine one of the major currency of the world with the non-major currency of the world. For example, PKR, MYR, which is Malaysian ringgit, PKR, which is Pakistan rupees, INR, which is Indian rupees, Singapore dollar. Okay, that's it, right? So when we combine these two currencies together, which is a major currency and a non-major currency, we get an exotic currency pair. I hope that's very simple now, and you have got an idea how does this work. Now we have the commodity currency pairs. Commodity currency pairs. Okay, these pairs involve currencies from countries heavily reliant on commodity exports. Okay, the commodity currencies are often correlated with the prices of specific commodities. The commodity currency pairs are the subset of forex major pairs that combine Australian dollar, New Zealand dollar, and CAD with the US dollar. Okay, for example, we have a three major commodity pairs. We have Australia, New Zealand, and Canada. Why we call it as a commodity economy? Let me explain you. Because Australian dollar, Canadian dollar, and the New Zealand dollar, they rely heavily on the export of the commodity. What kind of exports? What kind of commodity exports? For example, they export gold and oil, uh, and their economy is heavily dependent on the exports of gold and oil. Okay, so that's why they are known as a commodity currency pair. Another example is, let's suppose, Saudi Arab. Saudi Arab is a major producer of oil. All of the economy of of the of the Saudi Arab depends on the oil exports. So they are the commodity currency. Okay, but they are not the major. They are not the major commodity currency. The major commodity currencies are only Australian dollar, New Zealand dollar, and Canadian dollar. So what happens when we combine these forex major pairs? You can see here. For example, I can show you. Okay, so we have a commodity currency pairs. So commodity currency pairs are the subset of the major currency pairs. So these are the major currency pairs: JPY, CHF, GBP, and Euro. And and the commodity currency pairs are New Zealand dollar, Australian dollar, and Canadian dollar, which are also the part of the major currency pairs. Okay, when they are combined with the US dollar, okay, when they are combined with the US dollar, we form these kind of we form these kind of currency pairs: Australian dollar, New Zealand dollar, uh, New Zealand dollar, USD CAD. These three kinds of currency pairs are known as commodity currency pairs. Okay, sorry. Yes, commodity currency pairs. Remember this rule in mind. You can see this figure, and I have explained everything in this figure. Okay. All right. Now we have the commodity pairs. These are the last part here. Commodity pairs. These pairs involve trading of commodities such as precious metals or stocks or indices as the base asset trading against the quote asset. So when you have the commodity like precious metals like gold, silver, or we have oil, natural gas, we have stocks or indices. Okay, when we always have these commodities. These commodities are always the base commodity. Remember that they cannot come like this. They cannot be re- written like this, like USD gold. It should be the commodity should always be the base commodity, and the currency should be the code currency. For example, we have gold, US dollar, XAUSD, XAU GBP. So XAU is the major what to say? XAU is the a base commodity, and British pound is a code currency. Okay, so when we combine base commodity and a code currency together, we call it as a commodity pair. Okay, so commodity pair, we have gold, silver, we have S&P 500 index. Okay, we have Dow Jones, we have UK 100, which is also known as FTSE 100. Okay, now these are the examples of the commodity pairs. Yeah, we have energies like XBR USD, XNG, which is the natural gas, and US dollar, XTI USD, which is oil basically. Then we have bonds, we have metals, we have indices, and we have the natural commodities as well, like wheat, coca. Like wheat, the value of wheat is compared with the US dollar. So wheat to US dollar. So wheat is a commodity, base commodity, US dollar is a code currency. So this is a commodity pair. So you don't have to learn it, you just have to understand the concept. Okay. In a commodity pair, the commodity will always be the base asset. Remember that. And and the code currency will be the currency. Okay. That's it. Now, key points. Major pairs are the most traded and liquid currencies in the Forex market. These are the most traded and these are the most liquid. So always focus on major pairs. Minor pairs involve major currencies without US dollar. These are also very important. You can trade both major pairs and minor pairs, but always avoid these exotic pairs because so exotic pairs involve a major currency and a currency from a smaller or emerging economy. Remember that. So when economy is small and or when the economy is the emerging economy, when we combine it with the major currency, we get a exotic trading pair or the exotic forex pair. Okay. Then we have the commodity currency pairs. These are linked to the countries with economies heavily dependent on the commodity exports. I have already explained this. Commodity pairs represents precious metals, stock shares, indices, and are commonly traded against the major currencies. Remember that commodity pairs are commonly traded against the major currencies, which we have seen over here. Yeah. So we have a XAU AUD, okay, which is a gold New Zealand dollar. When the commodity combines with the major currencies of the world, we get a commodity pair. Okay, remember that. But also remember one rule that commodity is not a currency. Commodity is something which is physical, which is a natural resource, which is a natural resource. For example, gold, oil, natural gas, metals, and we have diamond, we have coal, all of the natural resources in the world, they are the commodities. Major currencies are the currencies that tie up with the major economies of the world. Okay, so that's it. So remember this rule that a commodity pair will always tie up with the major currency of the world. That's it. We have covered everything. You can review this document, okay, and make sure that you read this very carefully. You read this document very carefully so that you get a clear idea about the major currency pair, minor currency pair, exotic currency pair, and a a commodity currency pair and a commodity pair. And always remember one thing: you can trade commodity pair, you can trade commodity currency pair, you can trade forex major pair, a major forex pair. You can also trade minor forex pair, but always avoid trading exotic pairs. Okay, because I'll tell you the reasons that in an exotic pair, okay, they have generally low liquidity and they have higher spreads. Because of these two reasons, I always advise people to avoid trading exotic currency pairs. That's it. This is the conclusion of the episode number 4. We're gonna now move on to the episode number 5.